Trading Psychology Masterclass, 10 in 1, everything you need to know. Welcome to this masterclass on trading psychology, the part of trading that nobody talks about enough, but the part that actually makes or breaks you as a trader. Strategies are important. Technical indicators matter. But if your psychology isn't right, none of it will work. Today we're going deep. By the end of this session, you're going to understand why most traders fail, what separates the winners from the losers, and how you can finally get out of your own way and start trading like a professional. And I want you to stick with me, because this isn't surface-level advice. This is the stuff most traders don't want to hear, because it requires change, discipline, and self-awareness. But if you get this right, your entire trading journey will look different in the next year. Let's start with something almost every trader has experienced: the dangerous cycle of revenge trading. Now, if you've ever taken a loss and immediately jumped back into the market trying to make it back, congratulations, you've already met revenge trading. It usually starts with one bad trade. Maybe you didn't follow your rules. Maybe the market faked you out. Suddenly, you're down. And instead of accepting the loss and walking away, you feel this fire inside of you. You think, I'll get it back right now. So you double your position. You enter without a plan. You chase the market. And what happens? You lose more. This is how accounts get blown, not from one bad trade, but from the spiral of emotional decisions that follow it. Revenge trading isn't about strategy. It's about emotion. It's about ego. It's that refusal to accept that you were wrong. And here's the hard truth. The market doesn't care about your feelings. The market doesn't care if you're down $100 or $10,000. It will not move in your favor just because you're desperate. When you're revenge trading, you're not trading the market, you're trading your emotions. And that's a battle you will never win. So how do you break the cycle? First, you need to redefine what a loss actually means. A loss is not failure. A loss is feedback. Every trader takes losses, even the best in the world. The difference is, professionals don't attach their self-worth to a single trade. They see losses as part of the game, the cost of doing business. Second, set hard rules for yourself. For example, if you lose 2 trades in a row, you're done for the day. No exceptions. This forces you to step away before emotions take over. And third, focus on process over outcome. Instead of asking, did I win this trade? Ask, did I follow my plan? If the answer is yes, then even a losing trade is a success because you executed correctly. The moment you stop trying to get revenge on the market is the moment you start taking control of your trading. Now let's use this as a bridge into one of the most powerful forces in trading: fear and greed. Because if revenge trading is the symptom, fear and greed are the root causes. Fear and greed, these are the 2 emotions that control almost every decision traders make. Fear makes you hesitate. Fear makes you close trades too early. Fear makes you skip opportunities because you're scared of losing. On the other hand, greed makes you overtrade. Greed makes you risk too much. Greed makes you hold on to trades long after you should have exited. Both fear and greed are natural. They're human. But the problem is, trading punishes them both. Think about fear. Have you ever watched a trade set up perfectly, and then hesitated? Maybe you thought, what if it goes against me? So you didn't enter. And of course, the trade worked out exactly as you predicted. That's fear robbing you of opportunity. Now think about greed. Maybe you've been up on a trade, you've hit your target, but instead of taking profit, you thought just a little more. And then the market reversed and wiped it all away. That's greed stealing from you. The most dangerous thing is when fear and greed combine. For example, you're greedy for more, so you hold a trade too long. Then when it goes against you, fear kicks in and you freeze. You don't cut the loss because you're scared of realizing it. And before you know it, a small loss has turned into a big one. This is why mastering psychology is more important than mastering indicators. Because you can have the best system in the world, but if fear and greed control you, you'll sabotage yourself every single time. So how do you fight them? The answer is you don't. You can't eliminate fear and greed. They're part of being human. The key is learning to manage them. You manage fear by building confidence in your plan. You manage greed by having discipline with your targets and risk. And here's a secret. You can actually use these emotions to your advantage. For example, when you feel greedy, that's often a signal to take profit. When you feel fearful, that's often a sign to double-check if you're being too cautious. Emotions don't have to control you, they can inform you. But the first step is awareness. Most traders don't even realize how much fear and greed are driving their decisions. They think they're being logical when really they're being emotional. Start journaling your trades, not just the numbers, but how you felt during the trade. Over time, you'll see patterns. You'll see that every time you acted out of fear or greed, the result was worse than when you stuck to your plan. And when that realization hits, something shifts. You stop reacting blindly. You start making conscious choices. And that's when you start trading like a professional. So let me ask you this. Are you trading your plan? Or are you trading your emotions? Because until you answer that honestly, the market will keep teaching you the same painful lessons. Now that we've talked about fear and greed, let's tackle one of the most painful parts of trading. Taking losses. Most traders see a loss as a personal failure. They think it means they're bad at trading, or worse, that they'll never succeed. And because of that mindset, they avoid losses at all costs. They move stop losses further away. They hold on to losing trades, hoping they'll turn around. Or they refuse to accept small losses, which eventually snowball into catastrophic ones. But here's the truth. Every trader loses. Every single one. The difference between an amateur and a professional isn't whether they lose, it's how they respond to losing. Professional traders know something most beginners don't. Losses are tuition. They're the cost of learning. They're the cost of doing business. If you think about trading as running a business, you wouldn't expect every transaction to be profitable. You'd expect overhead. You'd expect expenses. That's exactly what losses are, expenses of the trading business. The problem is that most traders can't separate their ego from their trades. They see a loss not as money lost, but as a reflection of their self-worth. And that's why they spiral. The first step to taking losses like a pro is changing your perspective. A loss is not failure, it's feedback. It's information. Did you follow your plan? If yes, then the loss is a normal outcome of a system that wins over time. If no, then the loss is still valuable because it shows you exactly where you broke discipline. Second, size your trades so that a loss doesn't emotionally destroy you. If you're risking so much that every loss feels like a gut punch, you're risking too much. Professionals risk small enough that losses barely sting. They know the goal isn't to win every trade. The goal is to stay in the game long enough to let probabilities work in their favor. And third, celebrate good losses. That might sound crazy, but if you followed your rules and the trade just didn't work out, that's a win in the long run. Because consistency is what compounds, not perfection. Now, let's talk about something even harder than taking a single loss, recovering from blowing an account. If you've traded long enough, chances are you've blown an account before. Maybe it was $100, maybe $1,000, maybe more. And when that happens, it feels devastating. You feel like you failed. You feel ashamed. You start doubting whether you should even be trading. But here's the reality. Blowing an account is one of the most common experiences in trading. Almost every successful trader has blown at least one in their journey. The difference is some quit and some learn. If you've blown an account, here's the first thing you need to understand. It's not the end. It's a turning point. It's a wake-up call. It's the market telling you that something in your process is broken, and if you fix it, you can come back stronger. The worst thing you can do after blowing an account is rush back in with more money and the same habits. That's like putting water in a bucket full of holes. It'll just leak out again. So what should you do instead? Step 1, pause. Take a break. Don't trade for a week or two. Let your emotions cool down. Step 2, analyze. Go back through your trades. Find the patterns. Did you over-leverage? Did you revenge trade? Did you have no clear system? Be brutally honest with yourself. Step 3, rebuild but smaller. If you blew $1,000, don't come back with $1,000 again. Start with $100. Focus not on profits but on discipline. The goal isn't to flip the account. It's to prove to yourself that you can follow your rules. And finally, step 4, journal the journey. Document every trade, every thought, every emotion. This becomes your roadmap. When you see yourself repeating old mistakes, you'll catch it earlier next time. Let me tell you something powerful. A blown account can either be the reason you quit or the reason you succeed. For many traders, that first blown account is the turning point where they finally take risk management and psychology seriously. If you let it humble you and teach you, it becomes the best teacher you'll ever have. Here's the hook I want you to take away right now. A blown account doesn't define you, it refines you. It strips away the illusion that trading is easy money and forces you to respect the market. And once you gain that respect, you start trading with maturity, patience, and control. So the question isn't have you blown an account? The real question is what did you learn from it? Because if you come back with the same habits, history will repeat itself. But if you come back wiser, more disciplined, and more focused, that failure becomes the foundation of your success. Let's keep going, because the next trap is one of the biggest reasons traders keep losing money even after they recover. It's something you've probably done without realizing it. And that is overtrading. Alright, let's talk about one of the silent killers of trading accounts, overtrading. Now, overtrading doesn't always mean placing hundreds of trades in a single day. Sometimes it's much more subtle. Overtrading can be as simple as taking trades that don't fit your plan. Just jumping into the market because you're bored. Just trading just to feel like you're doing something. Most traders think the more they trade, the more they'll make. But the reality is, the more you trade, the more you expose yourself to risk. The market doesn't reward activity. It rewards precision. Here's the trap. Overtrading feels productive. You're sitting at your screen, watching every candle, clicking buy and sell, and it feels like you're working hard. But trading isn't like a 9-to-5 job. In fact, the harder you try to force trades, the more money you usually lose. Why do traders overtrade? A few reasons. One is boredom. The market is slow, so instead of waiting, they manufacture opportunities that aren't really there. Another is greed. They want to speed up their profits, so they take every setup they see, even low-quality ones. And the third reason is chasing losses. They want to make back what they lost, so they trade excessively, hoping one of them will stick. But here's the reality. Overtrading drains you. It drains your account. It drains your emotions. And it destroys your ability to think clearly. The way to stop overtrading is simple but not easy. First, you need to define your plan clearly. What setups will you take? What conditions must be met before you click buy or sell? Write it down. If the setup doesn't meet those conditions, don't trade it. Period. Second, set a daily trade limit. For example, no more than 3 trades per day. Even if you see more opportunities, force yourself to stop. This keeps you from spiraling into reckless trading. And third, track your trades. Over time, you'll see that the majority of your profits probably come from just a handful of high-quality setups. Everything else, the random trades, the impulsive trades, are just noise. Once you see that in black and white, overtrading becomes harder to justify. Here's the mini hook. Overtrading is like death by 1,000 cuts. It won't kill you instantly, but slowly, trade by trade, it bleeds your account dry. The traders who survive aren't the ones who trade the most. They're the ones who trade the best. And this leads us straight into one of the most underrated trading skills of all, patience. When most people think of trading, they picture fast action. Buy, sell, charts moving, money made in minutes. But the real money in trading isn't made by moving fast. It's made by waiting. Patience is the ability to sit on your hands while the market moves without you. It's the ability to watch price action that doesn't fit your plan and do nothing. And believe me, doing nothing is one of the hardest things a trader can learn. Why? Because as humans, we hate waiting. We live in a world of instant gratification, fast food, instant downloads, one-click shopping. Waiting feels like wasting time. But in trading, waiting is not wasted time. It's the most valuable time. Think about it. Most setups aren't worth your money. Most of what the market does is just noise. If you take every move, you're basically gambling. But if you wait for the right move, the high probability setup that matches your plan, that's when trading becomes profitable. Patience also protects you from emotional decisions. When you wait, you're giving yourself space to think. You're avoiding the trap of chasing every little candle. And patience doesn't end when you enter a trade. It matters after you're in one too. Most traders cut their winners short because they can't stand the waiting. They grab small profits quickly, afraid the market will reverse. But the big wins, the ones that really grow your account, only come to those who can wait, who can sit through the small pullbacks and let the trade breathe. Here's the beautiful paradox. Patience feels slow, but it actually speeds up your success. Because when you're patient, you avoid unnecessary losses. You conserve your capital. You take only the best trades. And over time, that consistency compounds much faster than reckless trading ever could. So here's a challenge for you. This week, instead of measuring success by how many trades you take, measure it by how many trades you don't take. Track the times you wanted to trade out of boredom but didn't. At the end of the week, look at how much money you saved by waiting. You'll be surprised to see that patience pays more than activity. Patience is not weakness. It's strength. It's the discipline to say, not yet, now. And when you develop it, you'll see your trading change forever. So let me ask you this. Are you trading because the setup is right? Or because you're impatient? That single question can save you thousands of dollars. Let's move into one of the most critical skills that separates long-term winners from everyone else: discipline. Discipline is the backbone of trading. It's the glue that holds your strategy, your risk management, and your psychology together. Without discipline, everything else falls apart. You can have the best system in the world, but if you don't follow it, it's worthless. Here's the truth about discipline. It's not about willpower in the heat of the moment. It's about preparation before the moment comes. If you wait until you're in the middle of a trade to decide whether you'll follow your rules, you've already lost. Emotions will take over. Discipline has to be built before you enter the market. So how do you build it? First, create a trading plan so clear that there's no room for debate. What's your setup? What's your entry? Your stop loss? Your take profit? Write it all down. That plan becomes your compass. Second, make accountability part of your process. This could be a trading journal where you record every single trade. Could be a trading buddy or mentor who checks in on your progress. The point is, when you know someone or even your future self is watching, you're more likely to stay disciplined. Third, build routines around trading. Wake up at the same time. Analyze at the same time. Review your trades at the same time. Consistency breeds discipline. The more structured your process, the less room there is for emotional decisions. And here's a mindset shift that changed everything for me. Discipline isn't restriction, it's freedom. Most traders think following rules limits them. But in reality, discipline frees you from chaos. It frees you from stress. It frees you from the emotional roller coaster of constant second-guessing. With discipline, you know exactly what to do and when to do it. That clarity is powerful. Here, discipline isn't about being perfect. It's about being consistent. You will slip. You will break your rules sometimes. The key is to recognize it quickly, correct it, and get back on track. A disciplined trader isn't someone who never fails. It's someone who never gives up on the process. Now let's dive into a closely related challenge. The psychology of holding winners and cutting losers. Most traders do the exact opposite of what they should. They cut their winners short and hold on to their losers too long. Why? Because of emotion. When you're in profit, fear kicks in. You're scared of losing what you've gained, so you grab it quickly. But when you're in a losing trade, hope takes over. You hold on, thinking it'll turn around. And that tiny hope grows until a small loss turns into a huge one. This is why most traders lose money. Not because their system is bad, but because their psychology sabotages their execution. The professional mindset flips this. Professionals cut losers quickly and hold winners patiently. They don't fall in love with a trade. If it doesn't meet expectations, they cut it without hesitation. And when they find themselves in a winning trade, they don't rush to grab crumbs. They let it play out, following their plan, maximizing the potential. Here's a practical way to build this habit. Predefine your exits. Before you enter a trade, know exactly where you'll cut it if it goes wrong, and exactly where you'll take profit if it goes right. This way, you remove the emotional decision-making in the heat of the moment. Another technique is to remind yourself of the bigger picture. One winning trade won't make you rich, and one losing trade won't ruin you. What matters is the series of trades over time. If you cut losers quickly and let winners run, your math works out in your favor, even if you're wrong more often than you're right. Most traders lose not because they're bad at analysis but because they're bad at psychology. Fix how you handle winners and losers, and your entire equity curve can transform. So ask yourself right now, do you want to feel good, or do you want to trade well? Because cutting winners feels good in the moment, it gives you instant satisfaction. Holding losers feels good in the moment, it gives you hope. But trading well often feels uncomfortable. It means holding through the waiting game. It means cutting when it hurts. But that discomfort is where real success lies. This is the shift. When you stop making decisions for comfort and start making them for consistency, you start trading like a pro. Alright, let's bring everything together. If you've been with me from the start of this masterclass, you've already seen how psychology drives nearly every decision in trading: revenge trading, fear, greed, patience, discipline. But all of it comes down to one massive shift: moving from a gambling mindset to a professional mindset. Most new traders don't realize it, but they start out as gamblers. They might call it trading, but deep down they're chasing thrills. They're hoping the market gives them fast money. That's why they overtrade, why they ignore risk management, why they blow up accounts. Gambling is based on hope. Professional trading is based on probability. So what does that shift look like? First, professionals treat trading as a business. Every trade is like a business decision, not a lottery ticket. They think in terms of return on risk, not return on luck. They know expenses are part of the business. Losing trades are simply the cost of doing business, not personal failures. Second, professionals focus on the process, not the outcome. Gamblers obsess over every trade. Did I win? Did I lose? Professionals zoom out. They understand that one trade means nothing. What matters is the next 100 trades, the next 500 trades. They trust that if they follow their system with discipline, the edge plays out over time. And third, professionals control their emotions. Gamblers let emotions drive the wheel: fear, greed, revenge. Professionals feel those emotions, but they don't let them dictate actions. They've trained themselves to act according to the plan, not the mood of the moment. The real profit in trading isn't money, it's control. Control over your actions, control over your mind, control over your decisions. When you master that, money follows naturally. But let's be honest, trading is still an emotional roller coaster. No matter how experienced you get, you'll feel ups and downs. The difference is whether you strap in and get tossed around, or whether you learn how to steady yourself. Think about it. One day you're up and you feel invincible. The next day you're down and you feel like the worst trader in the world. That swing from euphoria to despair burns out more traders than bad strategies ever do. The way off the roller coaster is perspective. Losses don't define you. Wins don't define you. What defines you is consistency. Don't let a single trade or even a single week change how you see yourself as a trader. Another way to flatten that emotional curve is risk control. When you risk too much, every trade feels like life or death. That's why small losses hurt so much. They're tied to your rent, your bills, your sense of security. But when you risk small, emotions shrink. Suddenly, a losing trade is just data. It's feedback, not a catastrophe. Trading should be boring. If your emotions are swinging wildly every day, you're not trading, you're gambling. Professional trading feels calm, steady, almost routine. The excitement should come from watching your account grow over months and years, not from the adrenaline of a single trade. And here's a final truth. The goal of trading psychology isn't to become emotionless. You're human. You'll always feel fear, greed, frustration, excitement. The goal is to feel them without being controlled by them. To notice the emotion, acknowledge it, but still act according to your plan. That's mastery. So let's recap what we've built together today. We talked about revenge trading and how dangerous it is when emotions control your mouse. We dug into fear and greed, the twin forces that destroy traders when left unchecked. We exposed overtrading and showed why patience is the silent weapon of professionals. We uncovered the power of discipline, and the psychology of cutting losers fast and holding winners long. And finally, we looked at the ultimate mindset shift, from gambling to professionalism, from emotional chaos to calm consistency. That's the journey of trading psychology. And if you take this seriously, if you actually practice these lessons, I promise you, you will not just trade differently, you'll live differently. Because the discipline, patience, and resilience you build in trading bleed into every other part of life. So let me leave you with this challenge. For the next 30 days, focus less on your profits and more on your psychology. Journal your emotions. Notice when fear speaks, when greed whispers, when impatience pushes you. Train yourself to pause, breathe, and follow your plan anyway. Do that for 30 days and you'll be shocked at the trader you become. And if this masterclass helped you, commit right now. Don't just watch and move on. Rewatch it. Take notes. Turn these principles into habits. Because trading success doesn't come from knowing, it comes from doing. Remember, markets will always test you. But with the right psychology, you'll always have the upper hand. So go out there, trade smart, stay disciplined, and most importantly, protect your mind. Because your psychology is your greatest trading edge.